Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you have joined us for our AI and Technology Conference. Our next live presentation is from Tantalus Systems. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Peter Londa, President, Chief Executive Officer, and Director of Tantalus Systems, which trades on the OTCQX best market under the symbol TGMPF and on the TSX under the symbol GRID. Welcome, Peter.
Greg, thank you. Appreciate everyone joining today's virtual conference and allocating a few minutes to learn about Tantalus Systems. We recently accessed an OTC symbol, TGMPF. We have been trading on the Toronto Stock Exchange since February of 2021, as referenced under the ticker symbol GRID, G-R-I-D. Before I dive into the presentation, provide a very quick example of what we do and the opportunity that we present for shareholders. For those of you who may have seen the news last week about the airport in London, Heathrow, shutting down because of an electric fire. That fire was started by the result of, or was a result of, a transformer within the distribution electric grid supporting the airport failing. The notion of infrastructure for electric utilities failing is almost daily, unfortunately, at this point in time. And so as I dive through our presentation and introduce you to our organization, we are a technology company that is solely focused on helping the electric utility industry modernize the distribution grid that we rely on every day for electricity, and we're all using today to access this virtual conference, and ultimately have brought a solution into the market that is being sold today to utilities to protect those transformers, not necessarily from failing, because devices fail, but most importantly, by accessing and sensing data behind those transformers, and based on that data, helping utilities predict when a transformer will fail, such that instead of having a failure and a cascading power outage and fire that disrupted 1,000 flights last week going in and out of Heathrow over a business day, is schedule maintenance on that transformer, schedule a time to replace the transformer, but most importantly, have the visibility and the insight as to what's happening so that nobody's surprised. We don't end up with disruptions like a lot of people experienced at the airport, and most importantly, can avoid economic loss and corresponding damages. So I use that as an example because for those that may not be familiar with the notion of the distribution electric grid, the utility industry in the United States, or the assets that utilities rely on to deliver power to all of us every day, it's a very explicit example of the types of technologies and solutions that we have developed and are selling to help utilities mitigate and avoid those massive disruptions. With that said, and with that high-level overview, we as an organization are focused on modernizing the distribution grid. We are not focused in generation, and we are not focused in transmission. Our customer base today is electric utilities. To that end, we sell our solutions today to 320 utilities, almost all of which are in the United States. And for those of you joining from the US, there are a couple different types of utilities. So before I get further, I'll explain. In major metropolitan areas, we have investor-owned utilities. In New York City, Con Edison. In San Francisco, Pacific Gas and Electric, PG&E. In the Midwest, a utility called First Energy. Right? Large organizations publicly traded on the New York Stock Exchange, delivering power to millions of homes, and in many circumstances also generating power with power plants. That represents about 2/3 of the electric distribution grid in the United States. And there are about 150 of those utilities, give or take. The balance of the electric utility industry on the distribution side is comprised of almost 2,600 public power utilities that are owned by municipalities and cities, as well as rural electric cooperative utilities that are in areas that are a little bit more rural in footprint or outside of a major metropolitan area. And it's that 1/3 of the power market or the distribution grid in the US where we have historically focused as an organization. It's a set of utilities that tend to be smaller, but in many circumstances, incredibly progressive in terms of adopting technology, working alongside technology partners like Tantalus to bring new technologies into the market, and for us as a smaller organization to test what we are building and making sure that we've got it right from an engineering perspective. As we look to expand our business, we are starting to sell to investor-owned utilities, which bring with it a different set of complexities and certainly an opportunity to scale revenue and financial profile. To that end, Pacific Gas and Electric in San Francisco is a new utility for us that we are growing in. United Illuminating in the state of Connecticut, a utility that we are working alongside to solve some very specific problems regulated in the state by the Public Utility Regulatory Authority, PURA. And so the landscape for Tantalus has historically been focusing on 1/3 of the market. As we look to scale and continue to grow our business, our total addressable market opportunity in the United States is every utility. So of the 2,750 utilities, we're over 10% of the total market today and continuing to try to scale not only within our customer base, but also certainly by adding new utilities. To give you some sense of our size, even though we started on the Toronto Stock Exchange, we report in US dollars. So as you look at our financial filings that tie to the TSX, you will see USD. We have about 140 employees today, headquartered just outside of Vancouver, British Columbia, which is why we initially went to the TSX as our public market. We have roughly 60 to 70 employees in the US. And to that end, I actually live and work outside of New York City in the state of Connecticut. In terms of going to market, we have a direct sales force of about 15 individuals that are constantly in front of utilities, presenting solutions. And our group of 15 employees leverage a network of indirect sales channel partners, of which there are 20 different companies spread regionally across the United States and into Canada that are consistently trying to access opportunities for us. In terms of financial profile, we shared our 2024 and Q4 2024 results 2 weeks ago, and we were fortunate to report a historic year for our organization. We generated the highest amount of revenue in our company's history at just over $44 million US. We reported the highest gross profit margin in our company's history at 54%. And as you disaggregate the business today and do additional work, you'll notice that our technology is a combination of a physical piece of hardware, an edge, intelligent, machine learning capable device that gets deployed in the field by utilities. And then we generate revenue from software and data analytics that are leveraging the data that we capture from our devices. So a combination of a device, intelligent device, and a combination of software and analytics. To that end, 65% of revenue is from our connected devices. 35% of our revenue is from software and services. And as we continue to validate our model, and as we continue to secure new opportunities with utilities, and as we continue to deploy intelligent devices across the distribution grid for those utilities, we have an increasing contribution from recurring revenue driven by software licenses, maintenance on those software licenses, and device fees that recur on an annual basis. About 25% of our total revenue today is recurring revenue. To that end, as we entered 2025, while we have not provided guidance, we do report annual recurring revenue each quarter. It's on a 12-month go-forward basis. And we entered this calendar year, January 1, 2025, with $12.7 million of recurring revenue in hand. Last year, we also generated positive adjusted EBITDA after a number of quarters of deliberately investing in R&D to bring a new product to market. So those of you listening today are meeting us at a time where we've gone through a fairly significant R&D effort to bring out the next generation of our solution capability and have gotten that certified and are now actively deploying and generating revenue from it. As we've gotten through the exercise of developing and commercializing a new product offering, the dollar spend in R&D has come down through the last few months of 2024, and our reversion back to positive adjusted EBITDA has surfaced as we've been conveying. We also generated positive cash flow from operations. We have positive free cash flow, and we entered this calendar year with about $13 million USD of cash on the balance sheet and another $4.5 million of availability under a line of credit with a senior lender, Comerica. So in the aggregate, about $18.5 to $19 million of liquidity to scale the business. In terms of what we do and in terms of the problems that we're trying to solve, utilities are facing a series of issues, one of which ties to something referred to as an imbalance between the supply of power on the generation side and the demand of power, how much we all consume. I happen to be coming from a hotel room today while traveling for business this week. And in my briefcase that I traveled with, I have 8 devices that need to be powered. And if you think about your world and what you rely on every day, we are constantly consuming more electricity. I also now drive the F-150 Lightning electric pickup truck from Ford. And every time I go to charge that vehicle at my home, I am doubling the amount of power that the utility has to deliver to the house. That's not the way the grid is designed. And so we see an increasing number of imbalances between supply and demand of electricity. We're seeing that from the rise of data centers. We're seeing that from our own consumer behavior, electric vehicles, more appliances, more apparatus, more devices that need to be powered. We're seeing that as businesses continue to electrify their day-to-day operations. And so in conjunction with that, when there are imbalances between supply and demand, we see blackouts. We see substations fail. We see transformers stress. Stress transformers lead to power outage, sometimes, unfortunately, power outage and electric fire. Right? Bad for the business of a utility. So we're working towards helping utilities identify when those peak loads are going to hit, where those peak loads are going to unfold, and most importantly, how to curtail those peak loads to protect assets and ensure we don't witness rolling blackouts. We're also seeing an increasing opportunity with utilities that as we put intelligent devices in the field, as we modernize the distribution grid, we're accessing more and more data. And as an organization, as a purpose, as an investment opportunity, we're constantly thinking through from a software and from a data analytics perspective, how we use that data to solve problems through machine learning. And so we are actively deploying machine learning-based, AI-enabled data analytics to help utilities pinpoint where a transformer is about to fail, where they have reliability issues, and where to prioritize their capital expenditures. We do that with a technology platform. We refer to that as the the Tantalus Grid Modernization Platform, TGMP, which happens to be the ticker symbol for us in the US on the OTCQX. That software, that technology platform includes intelligent devices. Think of your iPhone, edge computing capable devices. It includes communications networking to that device. Think a cellular network or in the circumstances of a utility, fiber or radio frequencies. We have software like an operating system. Think of like the OS operating system that is constantly upgraded on your iPhone by Apple almost weekly for dot releases and bug fixes and increased security. And then we have applications that ride on top of it. So think about the applications you use on your phone, a weather app, an email app, Safari to search the internet. We're not developing consumer applications, but we're developing applications around managing the load curve for a utility, managing the metering infrastructure and billing for utility, identifying where utilities need to deploy distribution automation equipment for protective relays and to fortify substations. As we think about scaling the company, we've been fairly successful in convincing utilities to modernize the grid from the substation down to a meter. We don't build meters, but we're like the Intel inside a smart meter. We're the edge computing, we're the software, we're the analytics. And to that end, we partner with some of the largest meter manufacturers in the world today. We continue to see growth in that business. We can continue to see competitive advantage. For us to scale, it represents 320 utilities today that are actively moving forward with us on deployments. Over the last 3 years, through our user community of utilities, we had an increasing number of use cases and issues shared with us that utilities were trying to solve. And it led us down a path of a massive R&D initiative for what we now call the TrueSense Gateway, the device in the middle. It's a device that retrofits into any ANSI compliant, meaning all of the meters and meter sockets in the United States today, Canada, Mexico, other locations. But it retrofits between any existing meter, whether it's smart or not, whether it's new or old, and any meter socket that's on the side of an individual's home or apartment building. And what our device is doing is we have, through R&D, been able to incorporate very granular power quality sensing capability that historically has only been available in the substation or only been available for thousands of dollars in a power quality measurement device, and taken that down to the residential meter socket. In addition to that power quality sensing, we've incorporated communications for the utility to send their own signal, not relying on consumer Wi-Fi, which is ripe for cybersecurity threat and or reliability, as well as equitable access for the homes that don't have Wi-Fi inside their house, but to send a communication signal down to a smart electric water heater from one of our partners, GE Appliances, to send a signal to a smart circuit breaker that can now be purchased at Home Depot or Lowe's from our partner, Savant Energy, to an electric vehicle charger, to an inverter for rooftop solar or storage. And the intent is ultimately to equip the utility to engage directly with consumers like me who now have an electric vehicle and economically incentivize to adjust my behavior or to make load in the home available. So as an example, in anticipation of a winter storm, a utility could notify its customers of potential power outages and send a signal from our device, the TrueSense Gateway, to an electric water heater and preheat that water, leveraging that water heater then as a source of thermal storage and taking load off the grid. Utilities can do that to mitigate imbalances between supply and demand. Utilities can do that in the event a transformer is starting to stress from our power quality sensing. The other thing that we're working on, as certain regions of the United States see rooftop solar and storage devices come on the grid, is how to deal with what's called a reverse power factor, or the reverse flow of power, meaning that the home is a source of generation and feeding power back up through the electric meter and onto the electric wires. It's a big issue as it relates to workforce safety and making sure people working for the utility know where there may be power in a circumstance when they're just trying to restore power after a storm. So there's no shortage of opportunity for us to help utilities not only leverage existing assets and protect those assets like transformers that are under massive stress, but also prepare for the electrification inside our home, whether that's associated with the adoption of an electric vehicle, whether that's more efficient use of electric water heating or air conditioning or electric heating systems, or for those homes that have started to invest in solar and storage at a localized level. The opportunity for our new product is fairly robust, and in the interest of time, to make sure that we have time to address Q&A, the opportunity for the TrueSense Gateway is substantial. We have over $500 million of opportunity already identified, not backlog, but in qualified sales pursuits. That $500 million is from about 50 utilities, 9 of which worked alongside our engineering team for the last 3 years to bring this technology to market. Those 9 utilities represent about $150 million of incremental revenue for us to accelerate the growth of our company, in addition to the core competencies that represent $45 million of revenue today. So we think we're at an inflection point. It's a pretty interesting time for us, certainly as we see, unfortunately, the disruption from a failed transformer that takes out one of the largest international airports in the world. And as we think through how to use devices, data and sensing from those devices, and then machine learning to solve real-world problems. The goal is to convince a utility that our device and data and software can solve problems, and from those devices, data, software, and analytics drive to a reasonable path for resolution. To give you some sense of cap table and structure, we're new to the OTCQX, about $100 million market cap in Canada. We're covered by 6 research analysts, the most recent Raymond James, that activated coverage a week and a half ago. About 76% of shareholdings is with institutional investors, a combination of hedge funds, pensions, mutual funds, family office. We have an increasing percentage of retail as we build awareness about the opportunity in front of Tantalus and for our shareholders. And I'm not the founder of the company. I was recruited in about 10 years ago to help the company pivot and get on a path for growth. So our insiders own about 7 or 8% of the company. It's a common stock company, no dilutive securities, no warrants that could create issues for shareholders down the road. With that, I'll take a pause and try to allocate time for questions. And I'll do my best to both kind of read and go through the Q&A that's come through. So thank you for those who have sent across questions. In terms of milestones for 2025, there are a few. We have been focusing heavily over the last few years on bringing our new technology, the TrueSense Gateway, into the market. And as you start to track us and hopefully see progress with our organization, we'll hope to announce an additional number of utilities deploying the technology. Last week, we announced the addition of Reading, Massachusetts, a public power utility just outside of Boston that has adopted not only our entire platform, but became the 28th utility to start deploying the TrueSense Gateway. So we see massive opportunity, and as we win strategic accounts in different regions of the US and see fairly robust adoption, we'll make announcements accordingly. In terms of IP protection, I see a second question here. We have 6 patents on the TrueSense Gateway. You know, as a smaller company, a patent is as good as a company can defend. So we are conscientious of what we want to keep in trade secret versus where we truly want to defend IP. Of the 6 patents that are pending on the TrueSense Gateway and now running its course accordingly, it's a combination of both design and process-oriented patents. And in terms of the competitive environment, another question that came across, we see a few different areas of competition. As it relates to the core of our business, what we have been doing for the last decade plus, and deploying at an increasing number of utilities, we partner with and we also compete with some of the largest meter manufacturers in the world. So there's a company called Itron, our largest meter partner, publicly traded on NASDAQ. Within Itron's organization, about a $2 billion revenue company, if my math is correct, they have a division called Outcomes. That division is about $91 million of revenue from their most recent filings that we saw publicly available. So that division is what competes with us. Itron's trying to sell its concept of distributed computing and distributed intelligence and its suite of applications and analytics. As it relates to the TrueSense Gateway, we have been fortunate to kind of create our own swim lane. There are two venture-backed companies that are taking a similar approach of retrofitting and not having utilities or not forcing a utility to rip and replace their metering infrastructure. Those two venture-backed companies are one focused just on the integration of residential rooftop solar, the other focused on power quality measurement. So we found that we are not only ahead of them in terms of getting to market faster through certifications, safety standards, and into the field. We have a cost advantage. And in both circumstances, we're solving multiple problems: power quality measurement, load management, advancements in metering infrastructure without having to physically replace the meter. It's not necessarily the same set of use cases that our competition can provide. We're also monitoring some activity within Tesla, which is building a similar device that fits between meter and meter socket. The intent of that device is to integrate and help consumers manage an EV from Tesla, rooftop solar from Tesla, the Powerwall. And while I don't see that as a direct competitor because it's focused on consumers and buyers of Tesla's equipment, we do see it as great validation that having control behind the meter, from our perspective, in the hands of a utility and allowing that utility to then economically incentivize their customer base, like all of us on this call today, we see that as a great opportunity. In terms of replacement sales, another question that came across, we have an opportunity to upgrade some of our longstanding customers. We have an opportunity to displace competitive technology. We also, with the TrueSense Gateway, have the opportunity to allow a utility to avoid a rip and replace of metering infrastructure or other equipment that still may have useful life. So we see a couple different opportunities for us to access a utility depending on where they are within their modernization journey. And I see another question related to tariffs. The world got very complex yesterday. As an American, as a resident in the state of Connecticut, and now as a technology CEO, the tariffs are going to impact not only the products that we build today in the Philippines. Meters predominantly are made in Mexico or overseas, not in the US today. Transformers predominantly made outside of the United States today. Most of the electronic equipment that we rely on across the grid is predominantly made outside the United States today. While some of that may come back into the United States, a lot of it should never come back into the United States, either because of capacity, cost, labor, or just fundamental efficiency. And so as we think about tariffs within our contracts, we do have the right to pass along tariffs to the utilities as our customer. I would anticipate utilities trying to figure out, as they see increased pricing on devices, how they address that through electric rates that we unfortunately all pay. So we are working through, I'd say, the complexities of what was announced yesterday on the global 10% import tariff, as well as the reciprocal tariffs country by country. We're evaluating what exposure we have as an organization within our supply chain and building these intelligent devices. And we are evaluating how best to absorb, both through our supply chain and with our contract manufacturer, which is a third party, as well as what portion we have to pass on to utilities and the cascading chain of events down to consumers. So it's an unfortunate dynamic to be in. At the end of the day, it doesn't disrupt the core competencies of this business. It doesn't disrupt the actual delivery of electricity. And if anything, tariffs create a very unique opportunity for us in that utilities, more so than ever, are going to have to extend the life of critical assets such as transformers. And we find ourselves at a very unique point in time where we happen to have a market-leading first mover advantage on helping utilities do that through the TrueSense Gateway and our analytics. So I'm conscientious of the impact near term. I'm also extremely excited about what that might mean as we see the buying patterns of utilities change in trying to protect assets. I'm at my time, so I appreciate the outreach from several of you on questions. Thank you very much for listening and learning a little bit more about Tantalus. You can find us on the OTCQX under TGMPF or on the Toronto Stock Exchange GRID. Have a great day.